Less than 2 weeks ago, Bitcoin was approaching $25,000, with many believing we were about to see $30,000, $35,000, possibly even $40,000 on a mega pump from the lows in November of $15,000. What 2 short weeks in the market does to us. And now we are approaching at $21,000 with the sidelined bulls and some of those bears coming back into the markets, calling for a break of $15,000. So what the hell is actually going on? Were we able to forecast this to some degree and keep ourselves safe from the FOMO at the peaks and hopefully safe from the FUD as we start to creep lower in prices? That's what we're going to look at in today's video. Where can this bottom come in? Is the current bottom in trouble at $15,000? And what can we expect for the rest of February? Make sure you've liked the content, subscribe to the channel, bell notification icon. If I've missed anything, you let me know in the comment section. While you're down there, check out the link in the top of the video description as we have our free crypto and economic report coming out this week, less than 24 hours away. That's that link in the top of the video description. Absolutely free, sent to your email inbox, looking at real estate, the markets and stocks and commodities, and of course, cryptocurrency, primarily Bitcoin. All right, last thing here is the shout out to our channel sponsors. It's the old shill here for Bybit, BitGet, and SwiftX for the Aussies. 0% spot fees on BitGet at the moment. There's 5 days left. If you want to trade on those exchanges, you do not have to use leverage, so stay safe out there. Use these links down below and get trading with 0% spot fees. All right, let's dive straight back into the charts and look at where we currently sit on Bitcoin, and is this low in trouble? So we're now at $21,700. Just 8 days ago in this video right here, titled "They Are Exiting Bitcoin and Waiting with Cash Ready for the Next Move in February," we were looking at a potential top coming into the market for many reasons around price and in particular time. We're measuring time in this video. So I want to show you that and play that clip very quickly right now so you can get a bit of an update from what we were looking at that time before the data has come in, before the market actually made that move to the downside. So check that out right now. What we can estimate from this, especially after a low, a significant cycle low, potentially the cycle low, and then a significant move out of that low being January, what typically happens is February isn't a very strong month to the upside. Doesn't mean we won't get any upside, because of course we have had some upside. It's been a higher month than the previous month, in this case by 1%. Maybe we go that extra mile and take out that August top, but that might be getting a little bit too excited for the month of February. Maybe we see that later in the first half of 2023. So as at the 5th of February, when Bitcoin was still at around 23,100, there was the hopes that we were going to go higher from that point. We were looking at those time frames, in particular, 2 of the major moves against the trend throughout the bear market. We had the move from January into that peak in March, and that was 9 weeks. Then we went to the low in June to the peak in August. That again was 9 weeks. And what we were looking at around that period of the peak over 8 days ago now, basically the 5th of February, we were looking at this particular move from the low in November being 10 bars already. So we had moved up slightly more than what we had done previously. And if we took it back to that previous low where the FTX collapse happened basically 2 weeks earlier, that gave us an approximate 12 weeks up from that low. Now, of course, the final low came in on that 21st, but essentially the move ended at FTX. We just got a tiny bit lower from that point. So whether you want to call it 10 weeks or 12 weeks, the market was up longer in time than the last 2 moves to the upside. So this is a positive for the market so far. It doesn't mean that the low is 100% confirmed, but we're starting to see some of those signs for that bull market returning, at least into that transitional period where it is starting to get a little safer to be DCAing into Bitcoin rather than these periods on the way down. So from that point, we've now reversed. We've been down for several days, approximately from the top. It's been 2 weeks, about 11, 12 days, and about a 12% move to the downside. And so pretty good timing for the exiting of basically the smart money or any of the money that was trying to push this market up higher. You could see that it was topping out and the market basically had to have at least a pause, maybe a correction. And that's what we looked at in that video, looking back over the history of Bitcoin, looking at all of the Februarys that had come in from previous cycles and trying to determine what would happen in February. So I'll just play you another quick clip about that. Basically what I was thinking would be the case for February now that we are now halfway through February. What I can see from this is we're probably due for a pause or a correction in this rally. So a bit of a pullback. And it seems like the timing is about right for February to have a top, which we're currently on this week. Maybe we go that little bit higher, maybe we don't. And the idea here is that we potentially track sideways as a best case for the bulls, or if you're looking to buy some more, maybe we get that pullback, which we'll have a look in future videos. So like I said, the way we did that was looking at price resistance, but more importantly, the time aspect. Now, there was one other piece that we looked at for that video to determine whether the market was about to top out and if we needed a little bit more time to consolidate before we're able to push higher, basically looking at where this market could fall to and why. And the other piece was the fear and greed index. And we were looking at this area at around 60 being a resistance level for the fear and greed. Basically, the greed was just getting a little bit too hot for that period of time. That doesn't mean that we had to have a top, but there were just a lot of signals coming together to say that maybe the probabilities are not on our side for higher prices on Bitcoin from that peak. We were really starting to push things to the very end. And essentially, if we're trading that or trying to dollar cost average into the market at better prices, we don't want to put the probabilities outside of our favor. And so from that point, they were looking like they were probably about to turn. And so from that time, we have turned over. So where can we see this low come in? And do I think the low is in trouble, this $15,000 BTC low? That's what we want to answer in today's video. So let's have a look at the fear and greed index. Where could this come back to? So remember that there's two important things that we're looking at here, three overall. One is price, the second is time, and then also we're looking at the third thing here is that market sentiment, looking at this fear and greed. And so time so far has been probably one of the best indicators here. If we can put them all together, even better. So we had the price coming in, obviously those resistance areas at around that $24,000, $25,000. The time aspect started to basically push towards that very end of the 9 bars. We got to the 10 and then it started to roll over. And then that greed overall was just hitting those 60 levels, which we've seen in the past be pretty good resistance areas for the market, especially if it's coming out of some extreme fear or essentially just fear on its own. So we've had that roll over. So let's have a look at where this could pull back to. And if we can put them all together, then we'll get an understanding of where that price may be. The most important thing is, where is the market sentiment going to be and in what period of time? We get those two, then we just look at whatever the price is on that day, that's probably going to be it. We don't need to have that exact target. Stay with me here. We're looking at this coming down, the market fear and greed index. So what we've seen as well, we've seen some pretty good consolidation on the way up, some stair stepping here from the 10s to the 20s, then to the 30s. So probably know where I'm going to look at here, probably between this 30 and 40 readings. That's where we want to see the fear and greed index consolidate to. Should we get some spikes? No problems. But like you can see in these areas, you can see the market essentially starts to consolidate. It does spike a little out and a little underneath, but you start to get that consolidation of the market sentiment. So that's what we're looking for here, somewhere around this 30 to 40, no dramas if it drops to around that 20 area as well. So that's the market fear and greed index. Now, in terms of timing, we've been up for 10 weeks. What can we look for next? Well, in that particular video right here, like we saw on the channel here, why everyone's wrong, we're looking at the timing here. This never ends well. We also looked at the fear and greed as well. Basically, probably looking at somewhere around late February or early March for this move to end. Of course, it could end earlier, but we just have to have a bit of a guide here and look at all of these factors coming together at the same time. So we've now been down for about 2 weeks. If we throw this onto a daily, we'll get a better measure of the actual days down. So that's 8 bars, 8 days to that particular low. And then if we come to this low here, that's the better reading here, around 11. So we were up for about 70 to 73 days from the low to the high. So if we go around half, because we use that 50% even on the time aspect, so about half of the time, 35 to 37 days is going to take us out to about early March. Of course, this could end earlier. I'm not trying to say that it has to go to these levels, but it's just a bit of a target to have a look at in terms of time, just like we would with price when we're looking at previous support and resistance levels. So now that we've got a bit of a target in terms of time, later in February, maybe it ends a bit earlier and then tracks around sideways, just buying that time like it's done many, many times before. You see these big moves and then it just goes sideways because it's just catching up in terms of time. Then we can look at the support and resistance levels in price. So let's look at this chart here for the support and resistance levels in price. Now, there's quite a few lines on the chart here, but essentially we just want to look at these horizontal levels. This first one here is coming in at around $20,700. That's been my key level for this entire period. You guys have been following. Let me know in the comments down below. Throw us an emoji of the up chart. Basically, from this period, the consolidation, we had that quick dump down. We were looking at 20,700 as it's been a key level for the market to hold as support, then break down, break above, and then hit as resistance on the way before going to 15K. So 20,700, pretty good looking level. 50% level is this right here, 19,861. Call it $20,000 even for a nice round number. Or if you want to get technical, use this number here. Past that point, 18,600, because it's been previous support levels. And through this area of September, you can see the lows were around 18,001, and we sort of dipped closer to that 18,000 level as well. So 18 to 18 and a half, another great area that was previous support. It broke, resisted, and then broke through nice and cleanly. If we were to fall below $18,000, that is where we can start to get those real big bearish hats out for Bitcoin, because if we drop back into this level underneath these previous support zones, to me that means we are going to go back and get close to testing that 15K, if not break it. So while we remain above these levels, potentially holding that $21,000, potentially holding $18,500, it's still looking pretty safe for Bitcoin. Obviously above this level, 20 to 21 is the best. Below 20 into this 18 to 20K level, not as good, but still safe. But if we drop below 18K, sure, get your bear hats out again, start telling me that 10K is back on. That is where we start to look much, much weaker. So those three things that we are looking for as this market begins to fall, after they were all exiting Bitcoin with their cash, waiting for this market to fall. They're not sure yet how much further this is going to go down. No one knows exactly where it's going to go, but you can bet your bottom dollar that the smart money and the manipulators out there are testing each of these levels to the downside. You can see there was a bit of consolidation here, and right now they are testing the supply of Bitcoin coming into the market as the market falls. So you can see that we just had this low in the last 24 hours at 21,300. So we got to that level, which was a pretty good sign here for some of you guys who are commenting down below. Awesome, mate, might wait for a small correction and go all in. So yeah, we did get that 21K pullback, which is a pretty good sign there as well. So I'm not going to get greedy in this in terms of what I'm going to do with the market, but you can just see how the manipulation is playing out, or essentially the testing here. You don't want to be buying and going all in if there is still more supply to come into Bitcoin, which drops the price lower. So what we'll end up seeing is some bounces and the swing chart start to trend upwards to let us know that the supply has potentially dried up and the demand is coming back into the market. But while the swing chart continues to put in lower highs, I should say, and lower lows, that is telling us that there is more supply to come, and we just have to wait that time out, which was the second thing we looked at, being the time aspect, potentially later in February, maybe early in March for that low to come in, or at least the move to end. And the third thing we're looking at was the market sentiment. Should we see the market sentiment drop into these levels throughout this period of the market trying to find this low, and we start to recover between sort of 30 and 40 odd in the fear and greed index, that's probably going to give us that signal that a lot of the time and the price targets are coming together, and we're just waiting now on the market sentiment to catch up, put all the pieces together, and then potentially we start to see the next reversal move from that point. So I hope you didn't get caught off guard at these FOMO areas of the market at the peak, and that you were tuning into the channel for these particular videos that we put out over a week ago now, while the market price was up here at around 23,100. Let me know in the comment section if you saw that coming and the FOMO that was in the market at that time. And I'll see you guys at the next video. Like, subscribe, bell notification icon, and if you are ready and waiting for our email newsletter coming out this week, thank you very much. If you haven't signed up already, check out the link top of the video description. I'll see you guys at the next video. Until then, peace out.